Hi, I'm Mike Pacito with IM Global Partner, joined by co-founder of DBI and co-portfolio manager Andrew Beer. Thanks for joining our monthly update on the IM Global Partner DBI Managed Futures Strategy ETF, ticker DBMF. We've named this January 2025 update CTAs Love Most Chaos. Andrew will expand on this title and more around the theme. And this monthly update will be one of the shorter ones we've ever done, but still as informative as usual and as entertaining as possible. So with that, Andrew, right over to you.
Thank you, Mike. Well, strap in, peoples. 2025 has really started with a bang. Trump, as you know, has been flooding the zone, and we had this mini freakout around DeepSeek and whether hundreds of billions of dollars of planned AI spending was a bit of a mistake. More on that in a second. On the performance front, we finished a pretty wild January, up 1.2% on a price basis, ahead of the SocGen CTA index, here and after the hedge fund index, and the Morningstar US Trend Systematic category, here and after the Morningstar category. On the macro front, we've been talking about a return of animal spirits. Interestingly, CTAs picked up on this early in 2024, although the flips in sentiment starting in July made it difficult to fully capitalize on it. The big debate right now is whether this manic, combative launch of the second Trump administration will be disruptive in a positive or chaotically incompetent way. Hence, the bullet around animal spirits or animal house. What we can say with confidence is that it is disruptive, change is afoot, and no one on planet Earth knows exactly how it will all play out. Which brings me to the last bullet point. CTAs love most chaos. And by this I mean CTAs like it when the world changes. Alpha generation during the return of inflation, the GFC, etc., is greatest during regime shifts when the old playbook is tossed in the dustbin. I say most because, like we saw last year, it can still be difficult to navigate such markets. If you are a professional investor and want to understand more about the nature of alpha generation by CTAs, I'd encourage you to join one of the Zoom webinars Mike puts together, where I'll showcase some slides I put together over the holidays. Now, this slide shows January performance of DBMF versus the SGCTA index, Morningstar category, and US Bloomberg Ag. So we were firing on all cylinders early in the month, but then gave back most gains during the rates reversal and DeepSeek freakout, and then gained some back by month end. Now, as replicators, this is a pattern we do like to see relative to the SGCTA index in the Morningstar category, so high correlation with some outperformance. Now, of course, 1 month does not a year make, but it's a good start. Next slide, please. Now, to move back to our inception to date performance, DBMF has outperformed the target hedge funds, and since the hedge funds have outperformed the mutual fund ETF peer group, doubled the performance of the Morningstar category. Last year, a hedge fund pejoratively referred to replication as a cheap knockoff. It's actually not. It's a repeatable investment process with structural alpha. This is what sold me a hedge fund guide to the idea. Now, this isn't the right forum to get into great detail on this, but if interested to hear more, please join the Zoom webinar I mentioned, or reach out to Mike to set up a call and we'll go through it. Next slide, please. Here is our slide on volatility adjusted positioning. The red dots are from the end of December and the green bars are at the end of January. The broad positioning is still core Trump trade, long US equities, long the US dollar, bets on higher rates, and long gold as an inflation hedge. Now, recent tactical moves have been to increase exposure to crude oil and to enter a spread trade between EAFE and emerging market equities. This, of course, brings us to the next slide. And here is year-to-date contribution by factor. Remember, this is only 1 month. So not surprisingly, 2 of the winners in January were US equities and gold. Currencies and rates were flattish, essentially 2 steps forward, 2 steps back. The spread trade between EAFE and EM worked and added some gains, but the timing of the increase in crude exposure cost us. Again, 1 month is a short window, but I personally like the positioning given what I see on the macro front. And with that, I'll pass the baton back to Mike.
Thank you, Andrew. So last month, before our standard closing performance information, we showed a slide featuring DBMF and managed futures versus other liquid alternatives categories. We were making the case that managed futures and DBMF provide the most truly alternative attributes and diversification benefits to a portfolio with no correlation to equities, while delivering meaningful alpha generation. This month, we've added a little bar chart and some bullets here to make the DBMF case versus our competitors in the managed futures universe a bit more strongly than we typically do. You'll see on the right-hand bar chart that I mentioned, DBMF has delivered more than 2 times the alpha of the Morningstar systematic trend, aka managed futures universe at large, alongside an expense ratio that's in the lowest decile of the category. In sum, we believe DBMF provides the most compelling single line or institutional grade solution for allocators looking for efficient exposure to the managed futures space. Okay, so on to performance. DBMF's annualized return since inception, including the month that was January 2025, is now 7.45%, ahead of the SocGen CTA index by over 215 basis points annualized, and ahead of the Morningstar systematic trend average by 380 basis points. Outperformance against the AG, the traditional diversifier for the standard 60/40 portfolio, and the primary benchmark for DBMF by prospectus, inclusive of dividends for both it and DBMF, is over 670 basis points annualized. Remember that, like bonds, DBMF pays a quarterly dividend to shareholders. This is from the underlying collateral of the portfolio. Okay, so thanks as always to our clients and to our prospective clients for your confidence and your interest in DBMF. If you have more questions about the strategy, would like further information or a call with us, please don't hesitate to reach out. Just send us an email at team@imgpfunds.com.